Good day to doctor and everyone. I'm Keshini Thanabalu and my metric number is 280006. Today I will present about the performance of Spritzer Berhad and its determinants. First of all, let me brief shortly about Spritzer Berhad. Spritzer Berhad is an investment holding company that is engaged in the production, marketing, and selling of a variety of bottled water products. The group's operation divided into three segments, which are manufacturing, trading, and other businesses. Spritzer Group, which was established in the late 1980s, is the industry leader in the Malaysia bottled water industry. Natural mineral water, sparkling mineral water, distilled drinking water, carbonated fruit flavoring drink, and non-carbonated fruit flavoring drink are all products that the company manufactures, distributes, markets, and sells. Moving into the problem statement of this study. Spritzer Berhad is exposed to financial risks, especially market risk, as a result of the COVID-19 pandemic, geopolitical instability caused by the Russian-Ukraine war, increasing global inflation risk, increasing interest rates, rising energy costs, and currency volatility, all are likely to have a negative impact on the company's performance and profitability. So it is necessary for Spritzer Berhad to manage and mitigate these risks to ensure that the company continues to be a profitable and successful business. Therefore, this research is conducted to analyze the overall performance and the risks that might affect the profitability performance of Spritzer Berhad. Next, the objective of this research. First of all, it is to determine the internal or four specific factors that could have an influence on Spritzer Berhad's performance. The next objective is to identify the external or macroeconomic factors that may influence the performance of Spritzer Berhad. Lastly, it is to investigate both internal and external factors that could have an influence on Spritzer Berhad's performance. The analysis was carried out based on the internal and external variables affecting the profitability performance of Spritzer Berhad. Quantitative data from the annual reports of 2017 to 2021 and information from the official websites of Spritzer Berhad were acquired to conduct this research. This research utilized RBM SPSS version 26 to construct descriptive statistics, correlation tables, model summaries, ANOVA, and coefficient tables that imply the relationship between the dependent and the independent variable. Now, let me explain the data analysis and the findings of this study. First of all, descriptive statistic. The figure represents the average mean and standard deviation of Spritzer Berhad from 2017 to 2021. From the table, we can know that the return on equity recorded the average mean of 0.0674, which implies that the company is only able to generate a profit of 6.74% from the money invested by its shareholders, whereas the standard deviation recorded as 0.0110 shows small volatility in the performance within the 5 years. Next, the mean of return on assets recorded as 0.0562, indicating Spritzer Berhad's yearly profit is approximately 5.62%, while the standard deviation is 0.0100, predicting minimal volatility in the financial performance of the company. Additionally, the analysis discovered that the mean of average collection period was 69 days, implying that the length of time to recover payment due from its customer is 69 days. The average collection period standard deviation was 8.0626, which indicates wider range of spread from year 2017 to 2021. Moreover, the mean of quick ratio of Spritzer Berhad is 2.9127, suggesting that the company's ability to liquidate its assets is about 291.27% on average, whereas the standard deviation recorded as 0.3862, indicating low volatility in the liquidity risk of the company. Furthermore, the analysis indicates the mean of the operating margin as 0.1048, implying that Spritzer Berhad's overall profitability after paying the operating cost is about 10.48%. The standard deviation of the operating margin is 0.0096, indicating low volatility from the year 2017 to 2021. Finally, the mean of the unemployment rate of Malaysia is 3.8160, indicating that 381.60% of Malaysia's citizens are unemployed from 2017 to 2021, while the standard deviation is 0.6780, showing a low range of spread from 2017 to 2021. Next, let's discuss the correlation between the dependent variable, which is return on equity, and the independent variables, which are return on assets, average collection period, debt to income, current ratio, quick ratio, operating margin, GDP growth, unemployment, inflation, interest rate, and exchange rate. Based on the correlation table, we can know that the return on equity is positively correlated to the return on assets, operating margin, and interest rate with present value of 0.995, 0.894, and 0.805 respectively. On the other hand, the average collection period, debt to income, operating ratio, GDP growth rate, inflation rate, and exchange rate are negatively correlated to the return on equity of Spritzer Berhad. Moreover, the return on equity is statistically significant to the return on assets, debt to income, operating margin, and interest rate because those ratios recorded p-value which is less than 0.05. This indicates that there is a linear relationship between the performance of a company and those variables. On the other hand, there is no significant linear correlation between the performance of a company and other variables with a p-value bigger than 0.05, which are the average collection period, current ratio, quick ratio, operating ratio, GDP growth rate, unemployment rate, inflation rate, and exchange rate. Next, model summary. Based on the analysis of internal factors, which is model 1, the R value R square and adjusted R square recorded as 1.00, which is greater than 0.5, implying that the model is effective enough to determine the relationship. On the other hand, the value of Durbin Wasser recorded as 1.168, which shows a positive autocorrelation because the value is below 2.0. Based on the analysis of Model 2 external factors, the R value that represents the correlation between the dependent and the independent variable recorded as 0.984, which is good because the value is greater than 0.4. On the other end, the R-square value recorded as 0.969, which is greater than 0.5, implying that the model is effective enough to determine the relationship as well, while the adjusted R-square shows a value of 0.875, which is not far from 0.969, so it is considered as good too. The value of Durbin-Watson recorded as 2.501, which shows a negative autocorrelation because the value is above 2.0. Finally, the Model 3 internal and external factors. The R value R square and the adjusted R square value recorded as 1.00, which is greater and implies the model is effective enough to determine the relationship as well. On the other hand, the value of Durbin-Watson recorded as 2.956, which shows a negative autocorrelation. Next, the analysis of ANOVA. Based on the analysis of internal factors, which is Model 1, the value of F recorded as 92348.929, which reaches significance with a p-value of 0.002. This indicates that the internal factors, which are operating margin, quick ratio, and average collection period, have a statistically significant influence on the dependent variable, which is return on equity. Next, Model 2 external factors. The value of F is recorded as 10.293 with a p-value of 0.224, which indicates that the external factors such as exchange rate, GDP growth rate, and interest rate are not statistically significant to the dependent variable because they recorded a p-value which is larger than 0.05 alpha level. Finally, the Model 3 internal and external factors. The value of F is recorded as 203951.118 with a p-value of 0.002, which is less than the 0.05 alpha level. This indicates that the internal factors, which is return on assets, and the external factors, which are exchange rate, and unemployment rate have a statistically significant influence on the dependent variable, which is return on equity. Next, the coefficient analysis. Based on the analysis of internal factors, which is model 1, the average collection period, quick ratio, and operating margin are statistically significant to the return on equity because these variables recorded a p-value of 0.007, 0.003, 0.006, and 0.002 respectively, which is less than 0.05. This implies that the significant change in the performance of Spritzer Berhad is due to the average collection period, quick ratio, and operating margin. Next, based on the analysis of external factors, which is Model 2, GDP growth rate, interest rate, and exchange rate are not statistically significant to the return on equity because these variables recorded a p-value of greater than 0.05. This implies that no significant change in the performance of Spritzer Berhad due to those external factors. Finally, the Model 3, both internal and external factors, the ROE and unemployment rate are statistically significant to the ROE because these variables recorded a p-value of less than 0.05. This implies that the significant change in the performance of Spritzer Berhad is due to the return on assets and the unemployment rate. On the other hand, the exchange rate are not statistically significant to the return on equity because the p-value of this variable is 0.077, which is greater than 0.05. This implies that no significant change in the performance of Spritzer Berhad due to the exchange rate. In conclusion, the performance of Spritzer Berhad is affected by the internal variables such as return on assets, average collection period, quick ratio, and operating margin. Hence, this group should pay closer attention to the company's performance in order to mitigate the potential financial risks such as credit risk, liquidity risk, and operational risk. That's all from me. Thank you.